So, first of all, I'll have a look at some GDP numbers. Vietnam's GDP is still ticking along very, very well. Albeit, if you have a look at our forecast GDP over the last 3 years or so, we were second to India and China for the last 2 years. What we're seeing is increased competitiveness of our near neighbours. So Vietnam's not actually slipping, but our neighbours are actually becoming more and more competitive, which is a little bit of a concern. Up here we see one country, and I'm wondering if you can guess which country this is. The Prime Minister has just sacked the Attorney General, he's dismissed the Police Commissioner, and he's thrown out the anti-corruption watchdog. Which country do you think that is on this chart? Yes, it's Papua New Guinea, and the reason is they've got a 20% GDP growth rate coming on in the next couple of years. Their gas pipelines and the gas is going to be an enormous boon for the economy. Okay, just having a look at some other indexes. Stock market index, what we can see here is generally throughout the region, on the back of all of our quantitative easing and good credit growth, most indexes are cycling up. We can see Vietnam's taken a hit about there. They've dropped about 7 or 8% on the back of the spat with China, but that has since recovered and we're now trading somewhere around here. So throughout the region, most stock markets are performing very, very well. Why is that important for property? It's important for property because generally as stock markets are picking up, as the economies are growing, money moves from bonds into the equities. And then equities are generally quite a good precursor for broader economic growth. What that should also mean for property in Vietnam is that we've got generally quite a small listed property sector. We've got several large, robust stocks, but generally a small listed property sector. What I'd like to see here is, or what we'd hope in the future, is that Vietnam's listed property sector becomes more dynamic as more stocks are put to the market. Next slide, we do, just to continue on the stock market theme, quite often hear about Vietnam's stock market being highly volatile, being contrived, being weighty on the trades on here and there. But what we can see in actual fact is that Vietnam is, as far as developing countries going, the volatility, and this is May to May, the volatility of Vietnam is not unusual compared to other developing or emerging countries. So it's really quite a normal amount of range in the trades. World Bank. The World Bank's just issued this report in June 2014. It's Global Economic Prospects. It's a pretty sturdy and robust read. What it has, what it's saying about our region, East Asia and the Pacific, is on the back of generally good credit growth, sustained credit growth, relatively good consumption. The region has a reasonable prospect for the near term. Now drilling into some of the property indicators, first of all I'll have a look at the region, how we sit in the region, and then look at our peers. This one is our regional office prices, and you can see that when we look against our regional peers, some of these are pretty heavy hitters with some pretty large numbers. Hanoi and Ho Chi Minh City, we're down towards the lower end of the scale here, and that's a reasonable expectation. If we look at the next slide though, which is into our peer group, we can see that our prices are actually quite strong. So this is for A-grade office prices. It is an average. The reason that those prices are quite strong and above these others in particular is that the yields are quite firm and our rents are still quite stable. So that's a scarcity of land in the CBD in the A-grade space, scarcity of offering, scarcity of product that's keeping those values quite high. Have a look at the residential prices again. This is prestige property throughout the region against the heavy hitters. Then we're somewhere down here. But if we look towards our peers, we can see that our pricing is actually quite reasonable. Against KL, Manila, others, residential property prices in Vietnam are still quite reasonable, and in my view that's representing a buy-side opportunity. Economics, just a little bit of blurb about a whole lot of economic theories and business cycles. What we have here is there's a number of business cycles that I've put up there. The one that I'm keen to focus on is this one. It's a little bit off to one side, but it's about business cycles due to politics. And what it argues is that once a new government comes to power, then they will tend to exert contractionist policies to contain inflation, so that as they're coming to the end of their term, they'll have expansionist policies and generally stimulate the economy. Therefore, engaging their popularity and putting them in for another term. Why is that important? If we have a look at the next slide, and I'm sorry that the quality of this slide is not that good, but if we have a look at the next slide, we can see that over the next period between 2015 and 2016, we have a lot of elections within the region. So if you subscribe to that political business cycle, you'd be expecting that sometime 2015, 2016, those expansionist policies would come through in many of these countries within the region. What's that mean to Vietnam? It probably means if I'm looking to buy in the region and I'm looking to see whether I'm putting my money here or elsewhere, then I'd be thinking that I should be probably investing somewhere before that cycle. ASEAN, Savills, we're a very big fan of the Asian Economic Community, which is opening in 2015. That will encourage a free flow of labour, skills, people, and capital between the ASEAN community. And it's all, I think it's over 80% of the objectives have so far been implemented. The most recent one, I think, was airline mandates. A number of things that we need to know about ASEAN that we should bear in mind when we're looking against the Asian community compared to other communities in the world. The 10 members form an economic powerhouse. It is a large powerhouse, and by 2050, it's going to be the fourth largest in the world. It's a very diverse group. One of the funny sayings about this diversity group is so diverse. One of the commentators wonders not so much why there is any conflict between the group, but why there hasn't been so much more conflict, because it is so diverse. Macroeconomics are stable. In fact, the ASEAN community has been far less volatile than the EU over the last 10 years. Growing hub of domestic demand, and I'll show you another slide on this later, but it's very, very powerful, the amount of consumers and domestic demand that's coming out of ASEAN. Well-positioned global trade flows. By 2025, more than 50% of the trade generated will be within a 5-hour flight of Myanmar. Interregional trade is deepening. Again, I'll give you another slide on this next, but particularly with the RCEP, all the FTAs being negotiated, and the AEC itself is going to be a very, very big pillar for growth. And there's over 227 of the world's global economies already domiciled in Asia. Urbanisation ratio, this is one of my old slides, I keep on bringing it up all the time. It is so very, very important understanding the growth of our cities. In particular, again, on the ASEAN side, if we look at these ASEAN countries and communities, they are all at the bottom here. So that means they all have a long way to go in the growth or the movement of their rural populations to their urban populations. What we can see, and is particularly exciting about Vietnam, is that our spread between 2010 and 2030 is the largest, second only to China. So what that means is that we do have a strong amount of rural to urban growth to continue. And that's a great opportunity for residential development, particularly when you overlay that with our household occupancy of around 4.1. So that 4.1 people per house is very, very high. We expect that to unwind. We expect that to come down. So really, really good drivers for the future of the development of our cities. This is the ASEAN consumer slide I mentioned. What we should be focusing on here is 2010, this is our number of households under $7,500 a year. By 2025, it will have shrunk to that level. This is the proportionate growth in consuming, in the emerging consuming middle class. So this is really, really powerful. This is a BCG slide. It's a really interesting slide from McKinsey and BCG. But it shows the massive amount of growth in our middle, upper classes, all with strong consumption. So a really, really good future on domestic consumption. Finally, the last slide to leave you with something to think about. This year is in all likelihood going to be an El Nino year. El Nino means a change, gross change in weather patterns. It's going to come through to the property side. I'll get there eventually. It could be the hottest on record. Already the opening rates in India are around 40% down. What this means is less agricultural production, less rice, less wheat, and less other agricultural products. The food security is therefore decreased. Global gold prices have already begun to track down. Less extreme weather, and I guess the Germans didn't read the last point, but because of the hot weather that the European teams might play a little bit less well, but with 7-1 for Germany last night, they clearly don't understand the El Nino years coming.